Today I want to talk about 9 of my favorite price action signals that I still trade after 16 years, and I will show you how to find entries using different types of tools and signals. So let's start with something basic, continuation breakouts, and this is one of the favorite ones that I trade almost every day. So on a higher time frame, and I use the daily time frame, I look for ranges and then I look for breakouts. Ideally you have very strong breakout days. And it's very common to see inside days after a breakout day. And for an inside day or multiple inside days, you want to see small candles, and you don't want to see that the close is very high on those inside days. The higher the close on an inside day, the more opposition it shows for the breakout. So if you see just small inside days that don't retrace much, that's great. I will then go to a lower time frame. In this case, we are on the 1 hour time frame, and I will look for patterns, and this is where I look for entry plans. So here we can see we have a good flag pattern. What I do in my trading is that I look for breakouts around the market open. I personally trade the London Open and the New York Open, but this can vary depending on where you are in the world and what time zone and market open fits you personally. We have a break and retest here, and that's an entry pattern that I look for. What I would also recommend is that instead of using diagonal trend lines, I would recommend to use horizontal support and resistance. Trend lines can be more subjective. The break and retest entry here is very powerful. I have another example later in this video to show you a different kind of break and retest. And at that point, that's where I typically go in. Here was the entry, and then you can see afterwards the trend really unfolded. So the beauty of this is that we are anticipating a new downtrend, and especially after long consolidations, you will often see very explosive moves into a new trend direction. Let's talk about supply and demand. I've talked about supply and demand on my channel many times over the years, and here is a great way of training it. So what we have is here on the left, we have a very strong supply zone. Supply zones are at the origin of big moves. I made a video about how to find the best supply zones, so you can check that out as well. So the market is pushing really strongly away from the zone, leaving this zone empty. And the trading plan is very simple. We are now here on the 2 hour, and we wait for the price to get back to the zone. And then we are looking for signals and specific type of patterns that can help us find entries. One major tip is that we are not trading supply and demand zones blindly. So just because the market is hitting this zone, it doesn't mean we automatically are going short. This is a very big mistake that many traders make. We need to see evidence that the price is slowing down here. So we're going now from the 2 hour to the 15-minute time frame, and here we have our entry pattern. We have a head and shoulder pattern with a very well-defined left shoulder. The right shoulder is very, very small, and this is a very great sign. The stronger the market would push higher here on the right shoulder, the worse the pattern is. But you can see the market is showing us very small candles, showing us that there's not a lot of buying interest. And then we have a very strong momentum breakout candle. The stronger the breakout, the better it is. Now you have two options. You can trade the initial breakout, or you could wait for a retest. In this case, there was no retest. The market just plummeted after the breakout. Again, this is a multi-time frame approach where we use the 2 hour as our higher time frame. And the 2 hour, the higher time frame, is typically used to identify major structures. In this case, we're looking for supply and demand zones. Let's talk about trend reversals. Trend reversals are a little bit more tricky to trade, but you can make it work. So here we are on the 1 hour time frame, and we are seeing that the market has been in a very long downtrend. When it comes to trading trend reversals, ideally you want to find an exhausted trend. What does it mean? Exhausted trends happen typically after 5, 7, 8 trend waves. If you see that a trend is just getting started and you only have 2, 3, 4 trend waves, that's not ideal because the market is still fresh, the trend is still fresh, and it's very likely that the trend is going to continue. But the longer a trend has kept going, the higher the chances that the traders who are participating in the trend are looking for an exit, and also that the price is now so low that new traders are getting into new positions, into the opposite direction. We are already seeing that the market is starting to make higher lows, but this is not good enough. You don't want to go long here. The price is in a very, very strong downtrend, and you want to see a little bit more evidence that the powers are really shifting. Now we are seeing a sign of a breakout and a potential retest, but at that point we don't know if this is really a retest because the market could just be here faking out the highs and then continuing lower. So it's a good starting point. We have the higher low, we have a higher high, but it's still too risky. And one thing to keep in mind when you're trading reversals is that you want to be on the cautious side. You don't want to be early in a trend reversal. We are trading a trend reversal, which means that we are potentially very early in a new uptrend. And that means there's going to be a lot of upside potential. And this also means that we don't have to rush it. We can be patient. We can wait for real clues that the market is turning. And we are okay with missing the initial bottom. Fishing for tops and bottoms is where most amateur traders lose all of their money. And if you've been trying to trade reversals, I'm sure that you've experienced this as well. You are too early and then the market is just continuing in the trend direction instead of making a reversal. So this is the signal that we are waiting for. We see that now the retest is holding. We have the strongest bullish candle that we have seen in all of this downtrend here. And this is a very great sign that the markets are turning. Sometimes those large breakout candles or retest candles will not be tradable because when you have such a big candle, the stop loss will be very far away. And you don't necessarily need such a big candle, but you want to see a strong sign that the market is turning over. For a target, we can look left and we can target this supply zone as a first great target. And you can see the market kept going and going, and there's a very high likelihood that if we don't see a big drawdown here and a big retracement, the market could recover and even push higher. So this could be your first target. And you could also scale out of your position. And it really shows you that you don't need to fish for tops and bottoms. There's still going to be a lot of upside potential if we're trading reversals because a new trend is just getting started. Let's talk about the breakout buildup. A lot of traders like to trade breakouts. I am one of them. And this buildup is a very great add-on pattern for a breakout. So we're here on the 4-hour chart. And on the 4-hour, we're identifying this resistance area. It has held here and here as well. What we can see is that leading up to the resistance level, the market started to make higher lows. We want to zoom in on this price action here on a lower time frame. So here we are now on the 15-minute chart. And this is how it looks pre-breakout. What we can see is a cup and handle pattern here. We have the resistance here at the top. And here is the cup part and here is the handle part. The handle part is so important when it comes to the breakout buildup. What we see is that the market pushed higher into the resistance, and whereas previously the market sold off very, very aggressively from this point and from this point, you can see this huge sell-off candle here and the long trend here. This time it's very different. The market sold off a little bit, came back, sold off, came back, sold off just a little bit, and the price is really sticking to the level. If the price is now breaking out, this is a much higher probability setup because you're already anticipating and you're already seeing that there's not a lot of selling interest at this level anymore. And this is so important for breakout trading that you observe how the market is trading into and away from a level. We have our entry candle here, the strong breakout. We're closing above all the previous highs now. A strong breakout candle is always a must. We can put our stop loss underneath the last swing point here on the lower time frame. And you can see in a matter of just a few candles, the price is reaching our almost 3R target. And that is a way how you can improve your breakouts by looking for those buildups. So you can choose to only trade breakouts if you have a very good and very strong buildup, and you can filter out all of the other low probability breakout scenarios. I want to talk about news fakeouts. A lot of traders like to trade news, but trading news can be very tricky. But there's a very good way of how you can mitigate that. So here we see a market that has been trading higher. The price entered a range, and then around here there were news. We had a spike up and a reversal down. And here we are on the 1-hour chart. We want to now carefully observe how the price is reacting to this level. A lot of traders may think that now, because we have the rejection and a strong faker to the downside, that the trend will unfold to the downside. But news effects can carry on for a few hours, and the initial effect of the news is often not as reliable. And what we can see just a little bit afterwards is that the market is pushing into the level. You can see that the market didn't react to the level here at all. If we would have seen that the market is pushing into the level and then moving stronger, closing below the low, that would have been your short signal. But the market pushing into the zone and not reversing is a very big red flag for shorts. We can see that now we have another breakout buildup. The market is trading into this news wick, moving lower, trading higher, and not moving lower at all. So again, we have the sequence of higher lows with our breakout buildup. The news fake out here is successfully rejected and the market is pushing into the opposite, continuing the uptrend. We can never forget what has happened in the past here. And the market is in a long-term uptrend. We cannot forget that. And now we have a high probability buying opportunity. And you can see that after the news fake out, which probably has trapped a lot of traders on the wrong side of the market, the right action and the right decision would have been to wait until the dust settles after news and then to see how the market is really reacting. There was no retest here, otherwise we could have shorted it, but the market continued the uptrend that we have seen previously, and you can see the market followed on the uptrend here very, very nicely. So let's talk about stop liquidity runs, and this is very important for breakout, continuation, and trend traders. What we have here is that the market is rolling over. A very strong uptrend, the market enters the sideways consolidation, and we have a strong breakout. At that point, a lot of traders will go short. And that's probably not the worst idea, especially if your higher time frame is also agreeing. But let's put us into the shoes of the breakout traders. If you're trading the breakout, your stop loss is going to be somewhere in this zone, right? That's how everybody is taught to do it. But what I've seen over the last few years is that instead of taking the initial breakout, I will always wait for the market to react to this zone. Of course, if the market sells off and doesn't look back, then I will miss the trade. However, fake breakouts are very, very common. And we have seen it just a moment ago with the news fake out. We want to see how the market is reacting here. Here we now see that we have a stop run. The market is entering the zone. And now it's very, very important to see how the market is reacting. We have to see strong selling come back into the market. Otherwise, this is just a failed and fake breakout. And the market is very likely continue higher. And then we will use that as a bullish opportunity. But if we see strong selling come in, like what we see here now, that's where you have your stop run confirmed. So the market pushes into the zone, frees up all the stops, gives you the bearish continuation signal here. The market doesn't move higher. And now is a good time to go short. So if you've been struggling with breakouts and fakeouts, I would recommend to stop trading breakouts and only wait for those fakeouts. The key to those stop runs is that you're waiting for strong selling to come back into the market. Don't just sell because the market is pushing into a stop zone. That's not the right action plan here. But if you can wait and see how is the market reacting and when is selling coming back into the market, this could help you improve your breakout trading. Let's talk about trendline breakouts. Trendlines are very hard to trade because they are quite subjective and you can draw diagonal trend lines in many different ways. However, there is some help here. So what we're seeing is that the price is in a mature trend and we have a double bottom here. It's also important to see the candle structure. Whereas in the trend, we have small candles, almost no wicks. Here it changes and now we have large candles and large wicks. And many of you will probably heard the famous trading quote that volatility increases at turning points. So when you see that after a mature trend, the volatility and the candle size and the candle wicks are all increasing, that could be your first hint that something is changing. We see that the market is breaking the trend line, but more importantly, the market is able to break through this previous support and resistance area. I don't recommend to go long here, but again, we want to see how the market is reacting. Here now we have our retest area, or you could also call it stop run area. We can also use a moving average as our confluence. If you're like moving average, that's always a good add-on. We see that the price is retesting the area. So now support turned into resistance and turned into support again. And we see the price accelerate higher. And this is really the key for trading breakouts and retests. A lot of traders make the mistake of just blindly buying here the support. In some cases, this might work, but you are much better off for the long term to wait for the market to accelerate higher. You don't necessarily have to wait for 2 candles to give you a strong momentum. 1 candle might have been enough in this case to get into a long position. You just basically want to see that the market is actively rejecting the level and pulling away from it. And then you can see the market is moving higher and the uptrend is unfolding very nicely.